But first, with the latest business and market news, here's Jayne Edwards.
Thanks, Alan. After a terrible week, Wall Street investors took a breath on Friday, with the indices drifting up and down throughout the day on thin volumes, and all closing slightly in the red. Figures showing a slight rise in retail sales and marginally improved consumer sentiment gave the US share market something of a reprieve at the end of its worst week since early July. But those numbers will be tested next week when a clutch of big US retailers report their earnings. The sell-off on world markets was sparked by the Federal Reserve's decision to loosen monetary policy further, while saying the pace of recovery is likely to be more modest than anticipated. The oil price also slid by 6% this week on expectations of lower demand, while in company news, the chief executive of car maker General Motors resigned unexpectedly after announcing GM's biggest quarterly profit in 6 years. Over in Europe, Germany has reported its strongest economic growth since reunification, up by 2.2% in the last quarter. On world markets over the week, the US and Japan fell sharply. The UK and Europe had smaller declines, and our local market erased its gains of last week. With news on Australian shares, here's Tom Elliott.
Well, as you just heard, the Australian stock market sold off pretty heavily during the week, in line with other share market indices around the world. Now, we are in results reporting season, and as always, there are both good and bad news stories out there. Just a word, we know the market is bearish at the moment because good news is ignored or maybe has a mildly positive impact on share prices, but bad news at the moment is being seized upon, and we're seeing some double-digit percentage falls in big company share prices. Firstly, let's look at some of the bad results. Two of the nation's biggest banks, Commonwealth and National Australia Bank, both disappointed the market. They did report profit results that were well into the billions of dollars, but the growth figures and outlook weren't that great, and as a result, their share prices fell quite heavily. Also, Telstra was hit particularly hard. More on that later. Computershare told the truth about its outlook and was punished for doing so. And building products company James Hardie also saw its shares fall heavily during the week. On the positive side, and there were some good news stories around in the financial world last week, two retailers, JB Hi-Fi and Myer, actually excited the market in a somewhat muted sense. Both reported fairly positive outlooks and saw their share prices rise accordingly. Also, Coca-Cola Amatil up quite strongly on a good rise in earnings for the previous year and a good outlook for the period ahead. And Transurban had a good result, although that was somewhat muted by the fact that its chairman, David Ryan, was forced to resign late in the week. In takeover land, Sigma was forced to deny rumours that its American suitor Aspen had decided to lift its bid to 65 cents a share. Remembering, of course, that Aspen first bid 60, then dropped it to 55, and now may be lifting it again to 65. And one of the longest-running rumours in the Australian stock market, will Alcoa finally mop up the minorities in Alumina? Alumina's share price rose strongly on Friday in anticipation that that might occur. Winner of the week is AXA Asia Pacific, up 7.5% after the ACCC said it would take more time to have a look at NAB's revised takeover bid. Loser of the week, however, is Telstra, down almost 12% after the company disappointed many with its earnings outlook.